Welcome back to the Halftime Report. I'm Dominic Chu on the ETF Edge today. China's power crunch has been roiling the global commodity space, affecting everything from oil and copper to soybeans and nickel prices. Now with U.S. inventories on the rise and an energy crisis raging in Europe, the equation is getting more complicated by the day. So let's drill down on the sudden surge in oil prices and pricing pressure on things like industrial metals, copper, iron ore, others, how investors can best play it. Joining me now is Dave Naudig, Director of Research and ETF over at ETF Trends, and Will Ryan, founder and CEO of Granite Shares. I will go, first of all, Dave, to you. This whole notion about ETFs in the marketplace, it seems to be where a lot of people are taking their views. Are you seeing any kinds of rotations between sectors or value versus growth that we should be noting?
Well, in terms of this energy story, what we've really seen is a lot of interest in China. Despite all of the fairly negative headlines, investors have been chasing China all year long. In September, we had another billion and change show up in China ETFs, capping us out at almost 12 billion so far year to date. The energy thing, as you pointed out, just adds a layer of complexity. What we're really understanding or starting to understand is the interconnectedness between the energy markets, industrial production, industrial metals. And I think it's a little bit tough to play an individual one of those. I know a lot of people out there are trying to play copper today with CPER, which is really the only game in town for direct copper futures exposure. But honestly, I think if you're looking for a more broad energy inflation play, I'd stick to core commodities exposure.
All right, so core commodities, Will, let's bring you in. If you want to play that core commodity exposure type situation, how exactly do investors take that view with the ETF market?
Well, there are a lot of ways to do that, Dominic, but probably one way is the Granite Shares commodity ETF, which took a symbol COMB, and that's just a broad representation of the commodity market, investing in commodity futures. So you get a basket of 23 different commodity futures, but really just a one-ticker solution to get exposure to the whole commodity market.
All right, Dave, Will, thank you both very much for that. We are diving deeper, much deeper into that commodity crunch and seeing how ETFs are setting up for the most volatile month of the past year. Tune in, 1 p.m. Eastern Time on etfedge.cnbc.com. We will be joined by Matthew Bartolini of State Street for his perspective on some key sector trends. Don't miss it. Keep it right here. The Halftime Report is back after this break.